Futures tied to the tech-heavy Nasdaq 100 climbed Wednesday morning after Netflix reported its subscriber count reached a new record in the fourth quarter. Nasdaq 100 futures rose 0.34%, while S&P 500 futures gained 0.21%. Dow Jones Industrial Average futures oscillated near the flat line. Netflix shares surged 8.6% in extended trading. The streaming company added more than 13 million new subscribers in the fourth quarter, bringing its total subscriber count to an all-time high of 260.8 million. Revenue also topped analysts' estimates, and the company issued earnings guidance for the current quarter that beat Wall Street's forecasts. Netflix's subscriber increase indicates the ongoing strength in the scaling of the ad-tier business, particularly scaling up at the end of last year, and also the momentum the company's building and its crackdown on password sharing. Jamie Lumley, senior analyst at Third Bridge Group, said on Closing Bell Overtime on Tuesday. The streaming giant's gains build upon mega-cap tech's strong gains in 2024, which have fueled the S&P 500 to record highs and confirmed a new bull market. To be sure, the Dow pulled back 0.25% during Tuesday's main trading session following disappointing earnings reports and guidance from several blue-chip companies. Meanwhile, the S&P 500 gained 0.29% to reach an all-time closing high. The Nasdaq Composite added 0.43%. Earnings reports expected on Wednesday include telecom giant AT&T and Freeport-McMoRan before the bell. Tesla, Las Vegas Sands and IBM will issue results after the close. On the economic front, traders will be looking toward U.S. manufacturing and services data for January. Fourth quarter gross domestic product will also be released later in the week. China will cut the amount of liquidity that banks are required to hold as reserves from early next month. Reserve ratio requirements for banks will be cut by 50 basis points from February 5, which will provide 1 trillion yuan $139.8 billion in long-term capital, People's Bank of China Governor Pan Gongsheng said at a press conference. Reducing the reserve requirements that banks must maintain will increase the capacity for lenders to extend loans and spur spending in the broader economy. It comes as Beijing seeks to bolster growth, while deleveraging its once bloated real estate sector, which accounts for about one-third of its economic activities. This is the central bank's first reduction in reserve requirements this year, after cutting RRR twice last year. The PBOC said there's room for further monetary policy easing. Read the full story here. Evelyn Cheng and Clement Tan shares of Chinese tech giant Alibaba surged almost 6% after founder Jack Ma reportedly bought $50 million worth of its Hong Kong stock in the fourth quarter. Citing people familiar with the matter, The New York Times reported that along with Ma, Alibaba chairman Joe Tsai also bought $151 million worth of Alibaba's U.S.